Let's talk about HVC areas in this video and make sure we understand what they mean. There is a study that is ongoing on the forum as well, and I'll highlight that near the end of this video. So one of the first things is HVC, which is HVC basically stands for high volume close. So this particular stock saw a gap up on earnings, and we saw a 40 million volume stick. Stock gapped up and had a good closing range. This is something we look for, right? Highest volume in over a year, plus a earnings catalyst with a high closing range. Now, if we just draw a line across this HVC area, this is what we call the HVC. This is the high volume close on that particular day. That becomes a level of interest as the stock is, sort of closed at that level, and then to see if it's supported at that level on a closing basis. So what you guys could be doing is sort of, make this as one of the setups that you research in the markets and really get good with, so that you can squeeze these stocks for fairly good gains early from their high volume close area. So if you traded this from around the 25 area into the 33, that's about a 35% move in less than a month or so. So that is a concept in and of itself. So I'll go over a few examples just to really make sure that you all understand it. Again, in this case, this is Team. This was again a recent gap up on earnings. This is our high volume close area. If we just draw a line across this, it's clearly obvious that the price was supported, right, as the stock continued to hold that closing level, and then we get this move out of it. Market being in an uptrend above the bullet pivot area is always a positive, because you want the M factor to be behind you, right? We want the M factor to be behind us. Plus the stock has this characteristic. It's on the earnings catalyst. Though the closing range wasn't the greatest on this, it was clearly supported at its high volume close area, and then we get this move out of it. So the first step to anything is always getting the right names on your radar, right? Once you have the right names on your radar, two is to figure out entry areas, right? So once we figure out entry areas, how do we do that? We study a bunch of them to figure the entry areas out. Where are the high probability areas of such for such stocks historically, and then you position versus those, defining your risk. So this is another good example that happened recently. Let's move on to EXPI. So this one was fairly a quick one. Again, we see a big volume move, right? Highest volume in over a year, high closing range. This becomes a level of interest. We get a good move out of it almost right away the next day. But, this is just to show you that these things are not, you don't buy them blindly and not manage risk. So if you were to buy versus this area and it undercuts the price, then you got to get out. But this is also sort of a momentum play, where if we look at this was a 15.54% move, right? I'm not saying that we catch every single percentage from here to that point, but if you catch a good chunk of it, that's a big positive, right? So that is another recent example, but I wanted to show you that these are, these things can fail. And in EXPI's case, this is there was a dividend date, and then it basically, stocks around dividends tend to act a little bit iffy. That's just how things go. So Task is another recent one, right? We get the highest volume since IPO day and IPO week at this particular candle. We draw the HVC area. This is our HVC area, right? It acted well, especially when the market was down. So that's a big positive, right? And the market, when it's in a trend, and then this moved up and out for nearly a double from that point on. So this characteristic was highest volume since IPO day, right? Highest volume since IPO week, right? And then you draw that HVC area, and then that's the point of interest for you to enter. And then the stock moved above that area on big volume on this day, and then follow through volume on the very next day. So this is really picture perfect here. You get the move, you come above this prior consolidation, you hold, and prices continuously support it, and you move up when the market is down. So let's move on to another example. TWLO. So this one is a historical one, just to give you guys context. We're not just pointing at this particular cycle in the markets. This particular volume candle, 30 million on an earnings catalyst, high closing range. And then we get this is our HVC area, and the stock basically, respects this the very next day with follow through volume through that level after opening down on the session. And then we get this move out of it. So again, like I said earlier, the first step is to get these names on your radar and then see how you could build entry tactics to be in such names, and then see if you could squeeze out these sort of 30, 35%, 60% moves in a very short span. So let's keep going with another historical example. Here's one on FSLY. This one is fairly similar. Again, this was the highest volume since IPO with a earnings catalyst. We draw a line through the HVC area, which is the high volume close. Right, price moves above on follow through volume the very next day. We get a move out of it right away, right? Again, first step is to get these on radar. Second is to execute and see where the high probability areas are. And if they fail once or twice, you may have to buy them back to really make them work. This is where studying them is a very key part of seeing success from these setups. If you don't study them and you blindly go and buy it, you're going to have very little conviction to hold or define risk parameters so that you could hold through a little bit of turbulence to catch this bigger move in the name. Let's go with another one, CMG. So this big volume, again, highest in over a year. We get a high volume close area. Now this one is a little bit, has a tendency to be a little bit slow. So knowing the character of the stock is also important. But eventually, after it consolidates around this larger range and the high volume close area, it picks up steam and then moves up and out as the market trends over the next few months out of a larger correction. Let's talk about the study a little bit. So if you go under forums and you go under studies, and there's an ongoing study by Greg on the high volume close gappers, and he's sort of going through collecting examples, right? So when you're doing a study, the first step, so 1, collect examples, right? 2, divide them into 6, winners, ones that moved up and out, and then the losers out of those lots, right? It's important to study those both sides. If you don't study those both sides, then you're going to be studying that one side, really not studying, what do the ones that fail, what are they doing, right? So collect examples, check the winners and losers of both sides, and then gather characteristics, right? Gather characteristics, and what we call those is the winning characteristics of ones that, acted really well. What did they share in common? And then you build a setup around that. A setup basically means, where do I define my risk? Where do I define my entry tactics? And that's how you master one single setup in the markets. So I hope this particular video, fairly short one, was helpful, right? On not only, how do you conduct a study, plus, collecting examples, checking the common characteristics. Is follow through volume important for a HVC to hold? And the only way you'll find out is by doing historical studies and seeing what the best ones share in common. So I hope that was helpful. I'll see you guys in the next video.